Hello, everyone. Welcome to this week's session on the markets. We're going to start in about 4 minutes, but I thought I'd just get everything going, just so I know everything's working. This week, we are doing it on Facebook Live and also on YouTube, just to try and sort of broaden how easy it is to access these things. So we'll start, as usual, at 12:30. And if you haven't seen these before, we take a look at the major markets. So we'll look at the pound against the dollar. I think it's a really interesting one at the moment. Euro dollar. We'll take a look at some stock market indices, which are maybe a little bit boring at the moment, but we'll take a look at those. So the US markets, the FTSE in the UK, and the DAX in Germany. And we'll look at gold and oil. And I think oil continues to be another interesting market. So let's see. So we'll get all of this done, and it'll normally takes us just under half an hour to go through this. So I'll just I don't think I can mute. I think because I'm broadcasting on lots of different platforms, I don't think I can put it on mute at the moment. But we'll start at 12:30 UK time on the dot. Right, it's just coming up to 12:30, so let's get started. I just need to start the recording for the webinar, then we're off. Okay, but I'm just making sure everything's working. Seems to be okay. Okay. Hello and welcome to this week's Market Outlook with me, David Jones from Capital.com. We're doing this a few different ways from now on. We've done it in the past via webinars. We're also doing it live on YouTube. If you're watching on that, that should be working. And also on our Facebook page, on the Capital.com Facebook page. So we do this every week. It's a session we do every week. And it's a quick sort of 20, 30-minute look at what's going on in the major markets, the events to look out for, big levels to watch, and where the opportunities might be. I'll just leave that risk warning up for a little bit. It's a bit of an odd week this week. I mean, today is obviously July the 4th, so it's Independence Day. It's a holiday in the US, so I think we could well be in for something of a quiet afternoon. We have seen a bit of pound volatility this morning. We'll have a look at that in a second, off the back of better than expected services data in the UK, which I think increases the odds of an interest rate hike in August for the UK. So it's bank holiday, Independence Day in the US, they're shut. But then tomorrow evening, we've got the latest release of the minutes from the Fed's most recent meeting. So the central bank of the USA, of their meetings every month, like all the central banks do, deciding whether or not they're going to raise rates. And it's the minutes that come out after that can often give an indication as to how they're thinking about the economy. So tomorrow night, 7 o'clock, we could see some volatility for foreign exchange markets. And then on Friday, of course, it's the big one. It's the first Friday of the month, and that normally only means one thing. It's non-farm payrolls. So it's the US unemployment numbers. They're out Friday. It's 1:30 UK time on Friday. So we'll see what they look like. And again, normally expect volatility. I think about 190,000 jobs are expected to have been added in the US economy during June. So we'll see how that goes on Friday. But that's it. I think the risk warning has been up for long enough. I'll just put my email address up there. I think you can sort of comment and put messages in while I'm doing this. But if you have any questions afterwards, just drop me an email. My email address is david.jones@Capital.com. And you can follow me on Twitter @JonesTheMarkets on Twitter. And of course, to find out more about Capital.com, just go to the website. Right, let's look at the markets. So I think we'll start off with pound US dollar. So this is our existing trading platform. We do have a new platform coming. I'll just show that while I'm on here quickly. So that's in beta test at the moment. If you're a client, you may well have access to that. So that's, I think, it's just being tested at the moment, but pretty functional platform. But let's just go back to the existing platform for now. Let me just make this full screen. So I think probably the two most interesting markets at the moment, pound US dollar and the price of oil. And we'll look at oil a bit later on in the session. But pound US dollar, let's just start off with this bigger picture view. You know, going back right from the beginning there, we've got the Brexit vote from just over 2 years ago now, isn't it? When the UK unexpectedly voted to leave the EU. Then the story for much of last year was of recovery, and we saw a massive move over the course of the year from around about 121 pound US dollar, and it actually got as high as 143 in April of this year, so over here. And then since then, we've seen it really clobbered, and there've been a couple of reasons why. First of all, there was the expectation that had built up that we were going to have a rate rise in May of this year from the Bank of England, but the Bank of England didn't go ahead. They got shaken by some, I think, weaker than expected economic data, so they decided not to raise rates. So that weighed on the pound, and just as I'm sure we're all aware, the ongoing Brexit negotiation uncertainty. It felt like not much progress was being made. That weighed on the pound as well. So we've seen this massive decline. We've seen, what is it, a 1,300, 1,400 point decline off those April highs. But where it's got interesting, I think in the last week, is where it's brought it down to. You know, I'm a big fan, if you've been on these webinars before, of looking at sort of previous big levels in the market. And if we went back to, October, November last year, when the pound was all bullish and it was on its way up, it spent a little bit of time around about 130, 131, this sort of place here. Okay, so we've got October lows and November lows. So 130-ish ended up being pretty major support for the pound on the way up to 144. And the weakness has brought it back to where we are now, you know, back down to these levels. So I think it's interesting that after this, you know, pretty solid decline, we are seeing possibly a little bit of confidence coming back for the pound, back at levels where we saw definite buying interest at the end of last year. I still think it's early days. You know, we've still got this trend is still down for the pound. You know, we'll have a look on the hourlies in a minute, but over it's nearly 2 months now, 6 weeks, 7 weeks. You know, we still have this trend down. But I think it's interesting that we have seen a reasonably sharp reversal ahead of this 130 area. So I think for now, I'd be in no hurry to jump in now and think, okay, it's going back to 144 before we know it. But I think it's going to be interesting to see if we get some weakness off these Fed minutes tomorrow night, or some weakness off the payrolls, and it drifts back towards 130, 131, do we see the buyers coming back in? So that's really the zone, I think, to watch. For fans of oscillators, I'm not a massive fan, I have to say, of oscillators, but because I think the problem is you can end up spending far too long looking at the squiggly lines at the bottom of the chart and not actually look at what the price is doing, what's going on with the price action. But I've got an RSI on here. So this is a 14-day RSI. What's interesting, we have this thing called bullish divergence. So bullish divergence, all the RSI is measuring is effectively, relative strength, momentum in the market. And over the last, what is it now, 2 or 3 weeks, the market slips to a low. The RSI is oversold, perfectly understandable with the market being so weak. The market rallies, slips to a low, but what we're seeing, slips to fresh lows. The RSI is making higher lows. So it's as if, the way I always look at this, it's as if the RSI is in an uptrend, but even though the market's in a downtrend. So this can be a suggestion that maybe sentiment is shifting, that maybe we're getting a little bit too oversold. So this does back up the argument of this whole 130, 131 area being an important one in terms of potential support. So I think it's interesting. If we're going to see the strength coming back, this is a pretty good place where we'd expect it to happen. Of course, we need to have 2 scenarios because 130 doesn't have to stay intact. If 130 breaks, so we're currently trading at, where are we now? 132, just above 132. So if it fell 200 points, it's a pretty major break below 130. I think we have to start looking at targeting a run back to maybe 128, the lows from August last year. But now it's done a reasonable job, albeit short term, over the last week or so of holding this market up. Let's just flip it over to an intraday chart, maybe a 4-hour chart. Let's have a look at that and just zoom it out. And we can see that, there we go, we can see that sort of latest leg lower in a bit more detail. So this has been the last sort of 7 weeks or so that we've seen the market drift lower. There's our trend in place. I think we've clearly got a problem in the 133 area. So I think to shake off this weakness and add a bit more credibility to a story of a recovery, I think we need to see the pound break through at least 133.50. Okay, so I think it's going to be a really interesting market to watch. It is trying to stage some sort of recovery. It's on a big level. Let's see what the next week brings, and particularly with the Fed minutes tomorrow and the other thing, the payrolls on Friday. Let's see what happens. So euro dollar, let's take a look at that. So that's why I think the pound is an interesting market, because we're back to this big level. Euro dollar isn't boring though either. Let's have a quick look on the daily charts for euro. So it's a similar sort of thing. I really am a big fan of this idea of big levels being potential turning points in the market. So euro dollar, we've got the chart here going back a year. So earlier this year, the euro touched 125 against the dollar, and then we have seen this massive dollar comeback. So when the dollar strengthens, we see the likes of the euro and the pound fall. But again, what's interesting, it's actually been doing this longer than the pound has. So over the last, what is it now, 6 weeks, 5 to 6 weeks, we've seen the euro hold above, not quite above, but the same sort of area as the lows from October, November last year. So 115, so I think it's really easy when it comes to the big levels for these markets. 130 for the pound, 115 for euro dollar. This is the area where we've seen these markets propped up. So 115 is really big support. We've got a bit of bullish divergence again going on with the RSI. So it's another interesting one to watch. Again, if we're going to stage a recovery from anywhere, this looks like a pretty good place, but if we take it out, if it breaks 115, it does feel like there's a lot of fresh air just beneath that. So I think it's a pretty pivotal level, this 115 one for euro dollar. But so far, at least, it's continuing to hold. Let's take a look on the hourly chart, because you can see it's just been pretty choppy. You can see, particularly over the last 2 or 3 weeks or so, it's been at relatively low volatility, plenty of sort of intraday swings, and you can see just how quickly we're moving away from this 115 area when it comes down. But it really struggles to make much progress. Okay, so I think we're going to see a quiet afternoon because the US is shut. But tomorrow evening, when these Fed minutes come out, maybe we'll have a bit more activity in these FX markets. Okay, so that's the pound and the euro. Let's take a look at stock markets. They have been I don't know if dull is the right word. There's been plenty of sort of intraday volatility. Let's start off with the S&P 500. So for fans of US markets, everyone knows the Dow. And the Dow Jones is a well-known index, but I think the one that gives you the broader sense of what's going on in US stock markets, and of course US stock markets affect the rest of the world, is the S&P 500. So the S&P 500, as its name suggests, is 500 shares. So the Dow Jones is only 30 shares. So we've got a much broader view of the market. So we had this big sell-off and the return of volatility, the end of Jan, beginning of Feb. You know, the biggest sell-off we've seen for years, I think, because markets had been just plodding their way higher. And since then, we haven't got anywhere near those old highs, you know. So it's gone from a market that almost sometimes on a daily basis was setting fresh all-time highs. We don't quite have that confidence back, and it wouldn't surprise me if we carried on in this sort of choppy trades at the moment, because I think there are still, you know, because of the concerns about the potential trade wars between the US and China, and maybe the US and Europe, and tariffs and all this sort of stuff, there is some concern about the health of the global economy. You know, in the maybe the short to medium term. So maybe we'll continue to see that indecisiveness in stock markets. But for the S&P 500, from a short-term trading point of view, if you wanted to day trade this, if we have a look at maybe a shorter-term chart, you can see here going back just a week or so how important this 2,700 level has been. You know, we've seen the market sell off to 2,700, stage a rally up to 2,740, sell off again to 95, back up to 40. I think just sort of yesterday or in the overnight session, you know, back to 2,700, back up to 40, and then sells off again as the day goes on. So we've got this definite short-term trading range for the S&P at the moment, and I think no real, you know, overall direction. That's the last 6 weeks or so. So it's it's a bit up and down, but no real trend. And you can see just how we're just banging away in a sideways range. So I don't think we should be surprised to see stock markets remain just somewhat choppy and directionless, you know, until we get, I don't know, some sort of major announcement on something, on trade tariffs or something like that. Let's see. Let's take a look at the UK market. Then we'll have a quick look at the German. So let's go with the there we go. There's a FTSE 100. Let's flip it over to a daily chart. Of course, the FTSE is often something of a strange one because so many companies that make up the FTSE 100 derive their earnings from overseas. So, you know, the likes of BP, for example, or HSBC, or, you know, companies like that. So much of their money is made overseas. So a weak pound usually helps lift the FTSE. And I think it definitely contributed, you know, to some of the strength that we had seen recently when it pushed out to fresh all-time highs back here in May. And since then, because we've had, you know, directionless US markets, you know, the US does tend to leave the rest of the world. We've seen a similar thing happen for the UK market. So it's just drifted off. You know, I think it's a really hard market to call when it's like this, because clearly when it's like this, we've got this fantastic trend going on, and it's just a bit directionless at the moment. But I think maybe we can pick up on something of a trend. Let's just pick it up here and change this to a 4-hour chart. So we could make the argument that since the all-time highs at 7.9, you know, we've got something of a downtrend going on. Let me just tidy this up. I've got too many lines on the chart. Let's get rid of these. There we go. So we've got something of a downtrend going on, and it was confirmed by the run-up on the 29th of June up towards 7,700. So I think the one tactic, if we rally back up towards 7.7, you know, it looks like a selling opportunity, expecting this downtrend to continue with maybe stop losses somewhere above 7,800. I think that looks like a reasonable approach while this downtrend is in place. Maybe a slightly more aggressive short-term bottom-picking approach. Over the last couple of weeks, whenever we've seen the market sort of down to 7,500, 7,480, we've seen the buyers come back in. So maybe, you know, when we push down to here, we see the market oversold, but it's just pretty directionless at the moment. And I think with stock markets, it is all about the US. You know, if you're only going to watch one stock market, the US is the one to watch, because that's the one that leads the rest of the world. So the FTSE, pretty weak, but nothing too dramatic. Let's take a look at the German 30, the DAX, because this is a market where even when times are dull, we're normally guaranteed a fair chunk of volatility. What's interesting here, this has been much weaker, I think, than US markets. So while the FTSE can get somewhat boring if US markets are sideways, I think with the DAX, as we can see here, the German market, we still have a fair bit of volatility. So we had seen, I remember picking up on this over the last couple of weeks, this level, sort of ahead of 12,500, had supported the DAX. We saw it have another go at 13.2, and it's gone crashing back below it the last week of June. But again, we can see arguably, if you had a longer term view on the DAX, this weakness could be a buying opportunity, because we saw when US markets sell off, we saw the DAX hold sort of the 11,700, 11,800 area. So we traded as low as 12,100, and it is a volatile market. It can easily move 100, 150, 200 points a day. So I think if we're going for the bigger moves, it's a market that we do need to give it a bit of room. So let's take a look on the hourly charts and pick up on some of the levels here. So you can see it's been following the break. It's been pretty sideways. We're trading almost near the top of the range, top of the recent range over the last week or so. So an aggressive strategy, if it rallied up towards 12.4, maybe look for weakness to come back, as we've seen since the 27th of June, and for the market to push back down to have a look at the low 12,000s. But I just think it's all a bit scrappy at the moment with stock markets. I think they're difficult ones to trade because the sentiment has changed so much since January, when the US markets fell off a cliff. We're gonna have a look at gold and oil, and I think oil is the other interesting market at the moment. Before we do that, let's do a quick look at the world of the crazy cryptocurrencies. This really has been a fascinating market, and if you were watching this since last year, this is Bitcoin, of course. When the volatility, really took off and the markets just went parabolic. And looking back on it now, clearly it's a market that was a bubble. That doesn't mean it's not going to go above 20,000 in the future. It doesn't mean it's not going to go below 1,000. Talking about hedging my bets, but clearly we had that. We had lots of people piling in, want to have exposure to cryptos, and as often the case in markets that go parabolic, late entrants have got toasted this year as the market has burst. But what's interesting is what's been going on. It's been the volatility has almost dried up. We did have, I think, a couple of major exchanges, or not so major, but a couple of exchanges being hacked in recent weeks, and that produced sort of spurts of short-term volatility. But what's interesting here, again, looking at big levels, if we look at Bitcoin last year, just before it sort of went parabolic from November, we sold off in November, touched about 5,500, then bang, 19,900, whatever it was in the end. Then the big sell-off into February of this year stopped at 5,900. We saw a bounce back to have a look at 12,000. And we're back here again. Over the last week or so, we've drifted back to these lows. So we are back in an area where in the past, sentiment towards Bitcoin has changed, where the market has seen, inverted commas, value for Bitcoin down at sort of 5,500, 6,000. And I think it's interesting that, again, I think a bit like the pound, the psychology is the same, even though Bitcoin and the pound are completely different markets. We're back at levels that had proved to be pretty pivotal in the past. So I think for Bitcoin, 5,500 to 6,000 are the levels to watch. And if I flip this over just quickly to an hourly, you can see just how, whenever it's gone sub 6,000, so below this sort of level here, how quick the buyers have come back in. So again, I don't think it means we're going to be sort of trading at 10,000 anytime soon. But I think it's interesting, from a bigger picture view. And it is the big picture I would look at on these cryptos rather than worrying about really short-term charts. It's interesting that we've come back to a level where we had seen buyers in the past. Are we going to see the same sort of thing this time around? And going back to the subject of RSIs, oscillators and divergence and all that sort of stuff, we do have a bit of bullish divergence going on here as well, where the market has hit a low on 13th of June, pushed a bit lower end of June, but we've got the RSI making higher lows. So that can be a suggestion that maybe the weakness for now has been overdone. So it's not a market that I look at every day, but I think we've got some obvious levels there to keep an eye on when it comes to Bitcoin. Right, we're going to have a look at our last two markets, which are gold and oil. So let's start off with gold. Let's bring that one up. So gold's been interesting. Gold has done what you would expect it to do, or what I would expect it to do, or what somebody looking at charts would expect it to do. Following this break, we had these really odd moves. Let's just zoom in a little bit here. So when was it? Was it June, middle of June? It's really odd moves where the market looked like it was breaking high. I've been trading in this sideways range for the best part of a month. Looked like it was breaking higher. I think it was on a Thursday. Then on the Friday, 15th of June, so the market completely turn around and go crashing through the range of the previous month, breaking through support. Traditionally, a breakthrough support is negative. We've seen a big level where there have been buyers in the past. There are no more buyers anymore, or the sellers are overwhelming the buyers. Bang, the price goes down. And since then, that's exactly what we've seen. We've seen the market sell off. So following that break of about 1282 was the level. The market traded as low yesterday as 1237. So we saw what's that, a $45 drop on the break. What's interesting though, and I don't want to get too carried away with a bullish argument, but what's interesting, going back to my favorite subject of big levels. So just before gold really accelerated during December, we saw lows hit down here. Let's get rid of that line because that's not important anymore. Ahead of, what was the low? So the low here, 1236. So 1236 was something of a turning point for gold when it came, and it was coming off from the 1350 zone. Buyers came back in, pushed the price up, couldn't make any progress, and bang, here we are. So again, if it's going to start building a base anywhere, this looks like a pretty good zone. Adding to sort of the positive argument is this candlestick from yesterday. I am a fan of candlesticks. I think they do make things look a lot simpler in terms of market psychology, what's going on. So what we've got going on here, this is bullish engulfing. So this is yesterday. You can see the candle engulfs the previous day's candle. So it does, when we see something like that, it's like a handbrake turn, to use a motoring term, handbrake turn in terms of sentiment. So we did see, quite a shift in sentiment yesterday for gold. So again, it's only one day. And I'd say, let's give it time. We've got the Fed minutes tomorrow. We've got the payrolls on Friday. But I think it's going to be interesting to see if gold continues to hold above this sort of $12.35 area. Are we going to see a base building here and some sort of recovery? So I think gold could get interesting again the next few days. So 12.35, the big level to watch on gold. And to wrap things up, oil. Oil is a really interesting market at the moment, and I'm surprised that we're maybe not seeing more of an effect on the wider economy, because here we go, June 2017. So a year ago, the price of oil was about $42 a barrel. It's currently trading, 72. So we've seen just an enormous, what's that, a 70% rise in the price of oil in little over a year. If I could draw my trend line correctly, hang on, let's plonk that in there. So we've seen this massive rise in the price of oil. And it drifted off. It did break the trend line. I think when we were looking at, do a weekly gold and oil video on our YouTube channel. And I was saying, well, it's a bit odd. It's broken the trend line, but arguably we've still got major highs and major lows. It really needs to sort itself out. And over the last couple of weeks, it has. We've seen it break out to fresh highs again. So the price of oil, still very much strong. So I think our trend line looks like that at the moment for oil. So at the moment, when we do have a market that has been in such a clear trend, probably one of the clearest trending major markets at the moment, I think, looking at the last year or so, any weakness in a market like this from a textbook point of view gets viewed as a buying opportunity. So I think what will be interesting, if we do see oil start to sell off from here. Oh, someone's asking the result. I think I've done it. This is the account that I use for trades, and I've got a couple of little trades doing that I did ahead of the webinar. So I bought oil and I bought the pound. So that's the result in real time up there. That's what that is, and it's real money. It's only a little bit of real money, but it's my real money. If it sells off, let's say we have someone, OPEC, say they're going to start pumping more oil or something, and we see it start to sell off. What would be interesting is if it does drift down to these levels again, this whole 63 to 67 zone that had been really big support just over the last month or so. So for now, it's punched out just yesterday, just about to fresh multi-year highs for the price of oil. It's continued this trend from the summer of last year, and it's still going strong. So for now, for me, the opportunity would be if it fell off a cliff and traded back to the mid 60s. Let's see if any stability comes back in and see if it makes another move higher. But oil's still powering higher, and I can't help but wonder: are we not going to see the effects of this higher oil price start filtering through to the wider economy and maybe having a bit of an impact on economic growth? Let's see what happens. So we'll start wrapping things up there. So I think pound US dollar, probably the interesting FX market to watch at the moment, because we had much better than expected UK data out today. Let me just show you the surge. Hang on, where's the move? Hang on, what are we looking at? I clicked on the wrong thing. Let me change this. Hold on a second. Just make it a 10-minute chart. I think I've clicked on the wrong thing. I think this was the surge earlier on. It sold off early this morning, and we saw a stronger move. But I think it's interesting because it has been so weak, and it's pulled back to this 130 zone. The price of gold is interesting because we had such a big day yesterday in terms of turnaround, and we're back to the old support. And oil, because once again, it's pushed out to fresh all-time highs. So I think there's plenty there to keep an eye on. So we'll do it all again next week. Same time, 12:30 on Facebook, YouTube, and the webinar. But any questions in the meantime, drop me an email, david.jones@capital.com. You can follow me on Twitter for updates on stuff at Jones the Markets, and of course to find out about the company, open an account, have a look at our new platform. If you go to Capital.com, you can do all those details on there. And if you're not subscribed to our YouTube channel, we do videos nearly every day on YouTube. So if you subscribe to that, I think one of the latest market psychology videos went up this week, and it's all about position sizing and trading too big, which I think is a really common problem for lots of traders, particularly new ones, taking on too much risk. So hopefully there's some useful stuff in there that's worth watching. But thanks for coming along. It all seemed to work okay. So I'm going to stop it now and see you all again in a week's time.